Hey folks, welcome to another Alphabet update, and today is Friday the 20th, where we just got news that Alphabet is laying off 12,000 employees. That's about 6% of its workforce, which is pretty big. Amazon cut 18,000 workers, and then Microsoft is cutting 10,000, and now it's Google's turn. So we're sort of seeing this trend of job cuts in the tech industry, which is a good thing for shareholders because these companies overhired during the last 2 years. So hopefully by cutting costs, they can increase profits in future quarters. So because of this news, Google's stock chart is getting a massive pop today. You can see yesterday it closed at around 93, but now it's already over 96. So I'm going to take advantage of this opportunity. Typically when a stock fills a gap like this during the day, it's not going to come back down and go back to the lows. It should stay above that level where it filled. So if I drop down to the 5-minute chart and just look at regular trading hours, it opened the day around $95. So I'm pretty confident it's not going to fall below this level again, even if the general S&P 500 drops. Google should still stay above this, at least for today. So if I take a look at the option chain for Google stock today, and expiring today, January 20th, at the $95 put strike, I can get about 18 cents if I sell that. And for protection, just in case, I might buy like the 93. So that should give me a spread of $12. And because I'm pretty sure it's not going to fall below 95, I might put in like 10 orders for this one. So that's going to be about $110 US. If this fills, let's drop this to 10.
Order partially filled. Order filled.
Okay, there we go. So that's 10 times 10, 100 minus $5. So that's $95 of extra credit that I will be earning. And I'll keep an eye on this. If it closes below 95, then I might close the position, but otherwise I'll just keep it open. Yeah, it's at 97 now. It's just continuing to go up. So because the stock has gone over $97 now, and I have a short strangle with a 95 call, I'm actually going to roll this 95 to a 96. So this is the short strangle, which includes a short put and a short call. The put is obviously going to expire out of the money, but if I right click on the call, what I can do is roll this to a higher strike because I might not want to get rid of the stock at 95, but I'm okay getting it called away at 96, so make $1 more. If I right click on that and say roll, I can see that automatically it's letting me buy this call at the 95 strike for about 245. And then on the same day, which is today, January 20th, I can come down here to 164 and sell this call. So I'm basically buying back the 95 and selling the 96. So I'll set the price to maybe like 82 for now, which is a bit lower than the mid, and see if that fills over the next little while.
Order filled.
Okay, so that just filled at 82. So what this means is instead of selling my shares for $95, I'm going to now sell it for 96 if Alphabet closes above $96 per share. The lowest I think it'll close today is at 95. Now let's jump over to Monday and see how all this played out. Okay, so it's now the next week. It's actually Tuesday, and I'm waiting to trade today because yesterday I was waiting to see if Alphabet would reject off of that bear market resistance line, and it looks like it did. And today we have another green candle. But let's talk a little bit about last week, which was pretty insane, especially Thursday and Friday. These two green bars here, the stock went from $91 to $98, so about 8% in just 2 trading days, which is very rare to see in a stock like Alphabet. When there's a huge move up like that, the stock usually consolidates or it sells off. You can see just in the last few months, there was this big move up and then some consolidation and a sell-off. Big move up, sell-off, big move up, sell-off, and so that's been happening for a while. So I do expect there to be a sell-off in the upcoming days, especially when this bear market channel has been tested and rejected. So if I zoom out a bit, you can see why the bear market channel is so important is because it's been inside of it for over a year. So unless we see a candle above it, there's no reason to believe that Alphabet will continue to go up. So in terms of what happened last week, I had some puts down here, which of course expired out of the money because the stock went up really high. And then I had a couple of $95 calls, which I didn't think the stock would go above, but obviously it did. It ended the week at around $98. So what I did on Friday was rolled my 95 to 96. I basically bought back my 95 call, and then I sold another 96 call, and I had to pay $82 for each of those contracts, and there were two. But instead of selling my shares for $95 each, I was able to get another dollar and sell it for $96, meaning I made $100 more. So I'm glad I did that because basically take the difference, that's $18 per contract that I was able to get on Friday. And here we can see at the end of the day on Friday, January 20th, my $96 Google calls got assigned, and there were two of them. And then the final thing I did, of course, was sell a 95.93 put spread for a credit. At the end of the day, after commissions and everything, I had a net premium of $5 because rolling that 95 to 96 costed me $164. Otherwise, my net premiums would be quite a bit higher. But I basically sacrificed premiums for taking less of a capital loss. Here you can see I've sold 200 shares at $96. So these shares were called away because of my short call. And now I'm back to owning 300 shares. I was at 300 and then I gained a couple hundred more shares in week 21. I basically bought them for 96 and then I'm selling them for 96. So in that case, it's pretty much break even. However, my average cost of those 300 shares that I have now is $99. So I'm basically working my way down. Because I sold the shares at $96, that is $3 less than my average cost. $3 times 200 shares that I sold, that's how I lost another $600 for my realized loss there. But because the stock went up like $6 since last week, I was able to capture most of those gains. And so at the end of the week, I'm up 3,400 and cumulatively I'm up 3,500. So that's good. You can see this large gain in the last week, similar to the prior week. And now I'm basically back to where I was back at week 20. So still a little bit higher to go to reach my target, which is this yellow line here. But let's take a look at the stock this week and I'll see what kind of options I can use. Okay, so this bear market channel has been in place for a long time and we've already just had a huge move up and the stock is pretty far away from the 9 EMA, which is this green line, and also the 21 EMA, this blue line. So the next resistance level, if it does go above the bear market trend, is around here because that's where the market previously went up and got rejected. So that's around the 102 level. So I'm probably going to sell a call option or a few call options at around 103 just to be a little bit safe. And I'll probably sell a put option down here around 95 because if I sold it last week at 96 and I buy it back at 95, then that's like buying low and selling high. And also $95 is the price at where if I buy 100 shares, then that will lower my average cost down from 99 to 98. So I'm looking at 103 for the call and 95 for the puts. Let's take a look at the option chain. Okay, so because I have 300 shares, I'm going to split up my calls. So I'm going to sell 3 separate calls at 3 different strike prices with the average being 103. And this way I can make more premiums than just selling 3 calls at 103. So right now I can make about 80 cents. I'll go with 81. But if I just sell 3 103 calls, then that's only going to be about 73 cents. So I'll put these orders in first. And I mentioned 95. That's about $19 for this contract here. And maybe I will buy 2, one at 95 and one at 93, and try to get $28 for this one. Okay, I'm going to lower the call combo down to 79 cents. So that one got filled. And for my put combo, I'll lower this to 26.
Order filled.
Okay, and then that one got filled as well just now. So that's about $100 of premiums after factoring in commissions. Okay, so I'm going to change this to 102 because that's my lowest call. Hopefully Alphabet ends the week somewhere between 102 and 95, and then all of my options will expire out of the money. But otherwise, we'll see how things go. Thanks a lot for watching, and I'll talk to you in the next one.